Thanks so much for tuning in to the Trade Setup with me, Niraj Shah. And at the onset, Dussehra greetings to everybody on for the weekend. It is essentially Dussehra weekend celebrations begin all across the country starting today, on the NDTV studios starting today itself. Well, did you know that the top 5 technology companies now make up for the highest percentage of the S&P 500's market cap in its history? That concentrated is that market. We talk about concentration in India, look at the concentration there. But anyways, let's take stock of what's really happened in terms of global news flow. S&P 500 slipped from record highs after data showed sticky inflation. That CPI number is turning out to be a bit of a problem. US CPI rose more than forecast, stalling the inflation progress. And this sets the cats among the pigeons in terms of the rate cut trajectory. Oil prices have risen more than 3% on the Israel-Iran conflict fears. And China investors expect a $283 billion of new stimulus this weekend. I wonder if anybody's short on metals, will they have the guts to carry home those short positions? Interesting to see that. Nevertheless, this is what the US markets did. Slipped from the highs, futures are flat. Asia should be flattish, I would reckon. Really doubt there'll be massive moves. I mean, Hang Seng is a case of its own, Shanghai and Hang Seng, but otherwise, it's a quiet start, maybe a bit of a uptick, really. Our implied open, well, it suggests about a 29-point downtick. Now, what's the trade setup for the day today? Well, the index, if you see the last 5 days or maybe slightly more, it's largely been constructed in a narrow 500-point range. It's not budging. 24,750, 800 odd to 25,200 odd. That's the range. Sell at higher levels, buy at lower levels. That's been the template really that we've worked with. The other point is the FI long short ratio is now at 38% from 80% earlier, which is also showing the mood of the market. But I do believe that range bottoms are near, and opportunities in such a narrow market always stay in the mid space, at the mid cap and the small cap end of the market, and which is what everybody should be looking forward to keeping in mind. Now remember, the other big change, and this is not something that too many of you are familiar with, we've lived in an era wherein the bank nifty, or the nifty bank as it used to be called, or bank nifty as it used to be called then, was not as large. Now it's become large. Now we know that from November 20th, weekly derivative contracts for bank nifty, mid cap nifty, and fin nifty will be discontinued. There'll only be nifty 50 contracts. Well, imagine what will happen to volumes. I wonder if the private market valuations of NSE are coming off as well. These are the last dates for trading into each of these indices as well. So this is an important one. I just thought I should highlight it. Okay, what about specific pockets and specific stocks? I think TCS is the first one on my list, simply because of the numbers. So revenues up 2.62%, largely in line you would estimate, but EBIT was a bit lower than expected. EBIT margin was 59 bips lower at 20 basis points lower at 24.06. The estimates were 24.9. Profit after tax 11,955. The expectation was 12,543. So in some sense, you could argue there is a bit below estimated. Now the point is, viewers, the outlook ahead didn't seem all that bad. One, the management has highlighted increased investments in Gen AI. The client engagements have risen to 600 in Q2 versus 275 in Q1 in Gen AI. In fact, they've said that 86 projects have gone live versus 8 in Q1. They expect discretionary spends to pick up in the coming quarters. BFSI will continue to recover. Retail will recover following a good holiday season. And investments in travel vertical are coming back as well. So a lot of positives sounded there. And a clutch of brokerages are optimistic, by the way. JP Morgan, HSBC, etc. Citi is not. Citi is maintain sell. Their target price is 3935 versus 4010. They continue to prefer Infosys over TCS. And the rationale that they've given is important. So for a bull, it is important to know this. One, of course, reported the weak Q2, which is fine. UK, US, continental Europe were also down. But they believe, more importantly, that FY26 growth estimates of the consensus are high because Citi is factoring in the decline in the BSNL deal, and therefore they are at 3% growth estimates, and they believe the consensus will come lower. Now let's wait and watch. I would presume that because TCS in the last 1 month has gone down by about 6%, some of the negatives are priced in. I wouldn't be surprised that even if it starts off lower, it finds some bottom at those levels and then kind of recovers a little bit. Watch out for that. Tricky trade today. IREDA Had some one-offs, but NI 52%, PAT just up 36%, gross NPAs at 2.19 versus 2.19. So gross NPAs were maintained, no big changes there. But I think the problem with IREDA, as I said, that there are one or two things, right? I mean, the impairment hit. Wonder, the renewable sector has so much tailwind, then why is it that IREDA had to take this hit? That's the key question. So would be interesting to see what IREDA has to say for the numbers today. Tata Elxsi is the next one. Revenues up 3.13%. EBIT margin could have been a bit better, really. Up only 62 basis points. The estimates were much higher, but still 229 crore PAT. The estimate was 200 crores. Divided here. Difficult to call what Tata Elxsi might do. Anand Rathi might continue to do well. They continue to show this 30% growth quarter after quarter after quarter. No different this time around as well on revenue as well as bottom line. So in line with estimate, it's very simple to estimate Anand Rathi's numbers. You clock in 30 to 33% growth and they deliver that. Oberoi Realty board has approved the raising of up to 6,000 crores via QIP. So I'll watch out for that number as well. It's a large fundraise. Let's see if Oberoi reacts a bit to this. Caustic soda prices have inched higher as we marked yesterday on closing show. Watch out for stocks like Epigral, Gujarat Alkalis, DCW. Could be interesting ones. They've risen quite a bit already, by the way, so bear that in mind. And a couple of brokerage notes to monitor. One, there is a note from Jefferies on Bandhan Bank. They're optimistic there, so that's one to note. And two, there is a note from Citi, I believe, on Cipla. They say the China-based pharma company has received the nod for paclitaxel, a generic of BMS Abraxane. Now, Cipla has this drug, but because Cipla's facility in Goa, I believe, is under the US FDA scanner, Cipla is not able to quite release meaningful versions of this right now, and therefore Cipla runs the risk of losing market share here, and this launch might actually impact the pricing of this generic version as well, as a result of which, so decline in prices and Chinese product can actually garner market share as well. So it could be negative for Cipla, and it is about 6 to 7% of Cipla's EPS estimates. So therefore, therein lies the problem. Watch out, Cipla was down yesterday. We might well see a bit of a cloud in Cipla again in the session today. So there's one more stock that I'm watching out for. But to all of you, once again, Dashara greetings. May you have a peaceful weekend and may you celebrate it well with your near and dear ones. Thanks so much for tuning in to this version of the Trade Setup.